As the Fed continues their fight against inflation, it's likely that getting a handle on it would mean the unemployment rate rising, creating some stagflation. And for more on that and a look around the markets, we welcome in Emily Hill, Bowersock Capital Partners, CEO and founding partner. Great to have you here with us, and a happy holiday season to you as well, Emily. When you look out to the next year and some of the top things that investors should be keeping an eye on as they manage through this environment with their portfolio, what are those top three things in your mind?
Well, I'm encouraging people to keep in mind that there's still a massive amount of liquidity in the economy. And I think one of the Fed's challenges is that every time it even hints at optimism or hints at a future pivot or pause, we see financial conditions loosening. And, my general advice is to accept the fact that this normalization process is going to be lengthy. So I don't think we've got a solution coming in the next quarter. I think that I do expect a recession. I have no idea how deep that recession will be. But I think we're probably in for a bumpy ride for 2023. So patience is what I would counsel.
Emily, it's Julie here. So, I think investors are still sort of shell-shocked over the past few years, right? We had a pandemic. We have now the Fed raising rates. What are the sort of fundamental takeaways of how investors need to adjust their paradigm right now and how they're thinking about investing, especially if this rocky period is going to last a while?
Mm-hmm. I don't think we're going back to a period of easy returns. We've had years and years of loose financial conditions that have generated something of a bubble. So you look at U.S. stocks now, and yes, they're probably fairly valued, but they're still not cheap. And, one of the underappreciated dynamics globally is climate change and the just increasing pace and frequency of geopolitical shocks. And I don't think market prices are taking that into account. Those supply chain shocks are inflationary. So I think it's even more important than it was 2 years ago to have a very diversified portfolio that includes both public and private investments, and that's prepared for numerous different scenarios, including a global recession, including stagflation, and including more of what we've had in the last year that could go on longer than expected.
Emily, if the last 5 years for investors could be seen as a Goldilocks era, low rates, tech stocks seemingly going up every single day, what do you think the next 5 years will be defined by?
I think the next 5 years are likely to be a bit of a slog. And also we are going to continue to see the same types of geopolitical shocks that we've seen in the last year and a half. It's just been, think about the Russian invasion of Ukraine, all of the turmoil in China. We are really seeing a global shift that you're right to call it a Goldilocks economy, but we're seeing a shift from an era of globalization, which really kept a lid on inflation, to, I think, a much more tumultuous 10-year period that, again, I think people are not recognizing the cost to the global economy of climate change.
So what is the top area that you're suggesting when people reach out for advice and are looking for guidance right now?
Mm-hmm. We really like private global infrastructure. So anything that will benefit from a waning or an increasing demand for limited resources. Number two, for more risk-averse investors, we like bonds. T-bills, June T-bills yielding over 4.5%. We haven't seen that for years and years. The risk there is that you get to June and you need to, buy new T-bills and suddenly rates are lower. I think that's very unlikely to happen. We like investment-grade corporate bonds for more conservative investors.
Well, I think we lost Emily there as well. We'll note she is bullish on Costco here as a stagflation play. That was Bowersock Capital Partners CEO and founding partner Emily Hill.